Hello everyone, and welcome again to another webinar with FX Educast, QTime FX, and your host Munther Marji. How's everybody doing? I hope you guys are doing great. I am very happy to be with you for yet another webinar. The last time we met was on Friday. We made some good profit, and today we are going to try to do the same kind of magic for you guys so you can achieve some profit and come again tomorrow happy about the webinars that we provide you with. These webinars are here, are free, are for you guys to see without paying anything because of the generous sponsorship of QTime FX. QTime FX is our Forex broker, our favorite Forex broker in the whole world. They are offering you to trade with a maximum leverage of 500 to 1, and it was not a surprise at all to see them win the award for lowest Forex spread broker of 2018 by ACI FMA. And I really hope they get it for 2019 and 2020 and so on, because they deserve it, guys. They are offering you the chance to trade with very tight spreads on all majors. Just look at these spreads on the screen. The euro, 0.4. The yen, 0.4. And similar spreads for all major instruments. Client funds are segregated in UOB, which is ranked in the 22nd place in World Bank ranking, and that is something. But to top that, of course, guys, we have now the promotion everybody's talking about, the $500 promotion. When you open your account with QTime FX, you can get up to $500 in bonus, and real bonus, withdrawable bonus, guys. It's not a trading credit. It's not just a number in your account. No. It is real money. Okay, guys, so QTime FX wants you to be successful. That's why they are offering you everything a trader can dream of. Bonus, of course, this very generous bonus, you can get it at $250 if you deposit $150 or more. Or you can go for the $500 when you deposit $300 or more. They are offering you this fantastic promotion. They are offering you the chance to trade with fantastic spreads, with zero commission, segregated funds, and of course, they are sponsoring these trading webinars to help you identify the best opportunities in the market. And they are paying me on your behalf so you can make money in this market. That's how much QTime FX cares about you. So show them some love, open your account there, and let's do this. I want to see every one of you guys taking these trading recommendations from my webinars, and I want you to be placing these orders on a real account with QTime FX, not a demo account. Don't waste your time with a demo account. Just open your account with QTime FX and a real account where you can, of course, trade these trading ideas that I provide you with every time. So, guys, I'm very happy to be with you, and I really want to start this thing with just please allow me to update the chat link so I can see what you guys are talking about. I need to do this every day. And yes, it is working now. That is fantastic. Okay, guys. So, welcome again. A new week. We did not meet yesterday for a number of reasons. We were trading on Friday, and I was very happy on Friday to see where the market was moving because we made some profit. And I said to myself, Munther, you are having a good day, and you gave very good results, very good recommendations to traders who believed in the results which were offered during the trading session that we had on Friday. I'm very happy to update you about the results of Friday. Unfortunately, we were unable to meet yesterday, although we had very interesting moves in the market yesterday in the direction we are expecting. Gold moved up, euro moved up, dollar yen moved down, so everything moved in the direction we were expecting. But unfortunately, I was not here to give you trading recommendations for yesterday, and that's why we are meeting here today to make it up for what we missed yesterday. And that is exactly what we are going to do today, guys. But first, let's take a look at the results, our Friday results, guys. Let me show you. These are the recommendations. These are screenshots from Friday, guys. We had these recommendations on the euro: buy at 10.25, sell at 9.68. None were triggered. We had sell on the pound at 28.87, which was triggered and was closed at market on the final moments of Friday trading with a loss of 37 pips. The yen, we had a buy at 67. The high was 65.2. I checked many brokers. Most of them are were having their high just below this order. And of course, we have only 0.4 of a pip in spread, so it was not triggered. But if at your broker it was triggered because they have a larger spread, of course, if your broker has a larger spread, that means this signal was triggered. If it was triggered, it was closed at market just before the close of the week with a loss of 20 pips. But of course, here at QTimeFX, it was not triggered. We had the high just 2 pips below the trigger, and we did not have this signal triggered. On the euro yen, we had 2 signals: buy at 20.79, sell at 20.20. The price got very close to triggering the buy. It stopped 4 pips before that, 20.75. Just like with the dollar yen, we stopped just a little bit before triggering the buy, and the euro yen, we just stopped just a little bit before triggering the buy. Now, for the good stuff, I'm keeping the best for last. We had a buy. Remember, I did not issue a sell signal on Friday for gold, only a buy signal, because I believed we are moving to the upside. I didn't want to sell. And this buy signal here at 60.3 got to its limit at 65.8, making us 55 pips of profit. Again, we had another limit done with crude oil. The short signal was triggered at 57.71. We were, of course, we did not even get close to this signal here, but this signal, the sell signal, was triggered, and it reached its limit, which was 50 pips. So overall, the total of these 6 recommendations, which actually they are more than 6 instruments. We analyzed 6 instruments, and we gave 11 recommendations on them. 5 of them we gave a buy and a sell, and we had only a buy on gold, so there were 11. Out of these 11, we had 3 triggered. We had losing one on pound, but we had 2 winners, 2 limits done on gold and oil. The total is 68 pips. Congratulations on this profit, guys. We are going to try and make the same kind of profit for you today. Fingers crossed. Okay, so 68 pips of profit. Kudos to you guys. Fantastic results, and congratulations on that. Now, with this out of the way, let us move to the charts. Let me take you to the charts now, guys. All right, of course, we will start with the euro. Guys, if you were watching the euro yesterday and you remembered me, I'm sure you knew that I was a happy man yesterday. I have been a euro bull for weeks, even for a few months right now. since we got to levels below 109.73. That was my support that I was waiting for. We got maybe 80 pips below. Actually, we got 95 pips below that. So in these areas below 109 and just above 109, I was recommending longs to everybody. And I say this every day in every webinar. I'm a Eurobull for the time being. That's why I was very happy to see what the euro did yesterday. Let's take a look. So this is yesterday trading, guys. Very, very nice move to the upside. We were trading just above the $1.10 landmark, and we got very close to the $1.11 landmark, reaching the highest level in 11 days. So here we got to 91. The maximum price, or the highest pricing yesterday, was 91, the highest in 11 days. Since this top right here, it's the highest price. And of course, when we were talking about this, we said that this is a technically important high, the 1097. We got very close to it here. And that means, of course, here's 91, 97. That means we have something in this area. This was the previous touch on this falling trend line. And of course, it is important. This is how I find important levels. Also, we talked about the Dow 2/3. Maybe, I'm sorry, we did not meet yesterday. I didn't talk about it here. I talked about it in another place. The 109.79, guys, this is the Dow 2/3 level for the whole recovery attempt, okay? Now, on Friday, we got a high of 109.80, one single pip above this Fibonacci, or sorry, this retracement level. It's not Fibonacci level, it's a Dow level. So when you have a bottom or a top this close to a retracement level, and then you see a reaction that is more than 100 pips in the opposite direction, that means the trend in the market is in the direction away from the retracement level. This is a technique that I use all the time to identify the direction of the market. And when I see retracement levels doing their magic like this, I have confidence, more confidence in the direction that I believe in. Of course, I believe that the euro is going up. I have said this many, many times in my webinars, and I'm not talking about 100 pips, guys. I'm talking about more than 1,000 pips to the upside from the recent lows, more than 1,000 pips. We are, of course, looking for clues on the chart every day to see if we are right about what we believe about the market or wrong. And what has been happening recently is showing us that we are completely right about believing in the potential of the euro moving to the upside. So with this said, we will continue to hold on very dearly to our bullish euro expectations. Now, the bottoming here was a very good first step. The second step, which we needed to see, was breaking an important resistance. And yesterday, we had this falling trend line from November 4th high, which was running extremely close to the microterm 61.8 retracement, Fibonacci retracement level at 1052. I was really, when I saw the market was rising, I was praying to break above 1052, and we did, and we moved almost 40 pips above it. Everything in that move confirms that we have every reason to believe in the euro, and I will of course continue to do so because I have been doing so for a number of weeks now. So we believe that the euro is going to move up unless a huge surprise happens and we break below these two trend lines. The first trend line, of course, we can drop back and test this trend line. First trend line, let me see. I want to look for, guys, retracement level, which is very close to these trend lines. I want to look for, nope, yeah, this one is good, it's very good, and this one is, yeah, So I'm going to use these two. Let me delete this one. We don't need it anymore. This is what we will be focusing on for today. These are retracements for the last part of this move to the upside. We started, of course, here on Friday. And then yesterday was fantastic for the euro. Very, very nice move to the upside. So for this last part of the move higher, I want to calculate retracements. And I found out that the 50% level is at 1046, which is, as you can see, very, very, very close to this trend line, the falling trend line from November 4th. And of course, after breaking important levels, support, resistance, trend line, channels, whatever they are, even moving averages, sometimes the price goes back and tests the level which was broken. This can happen, of course. We are around in the 70s now, in the 1070s. We can easily drop to the 1040s, test this trend line again, and then take off in another trip to the upside, going north. So this definitely will be my initial support for today, but I have another support that I really care about, which is the 71.4 retracement for this move, which is at 1027. So 1027 is an important support. As you can see, currently it is just a little bit above this rising trend line from Friday low, but of course it's a rising trend line, so with time it's going to continue moving. With every new candle it's going to go up 1 pip or something like that. So hours from now it's going to be very, very close to the Marji level 1027, this retracement level. So first piece of information I'm going to give you, we have support at 1046, right? 1046. We have a support at 1027. And of course, we have Friday low, which is very important, 109. Actually, it is 1 pip below Friday low, the Fibonacci level, 109.79. So these are the support levels that I need you to care about for today, guys. Now, I will not recommend a short position unless we break all of these support levels. Finding support at any of them, especially the first two, is a reason to believe in the euro and a reason to believe that another part of the move to the upside is going to follow. So no shorting recommendation unless we break 109.79. But we can try, of course, a long position around these levels. So we're going to think about that. Now for the resistance, of course, as I just said, we had tops in the 90s more than once recently. Just look at these highs, guys. November 18th high was 90, exactly 90, 1090. November 21st high was 97. And November 22nd high was 88, very close to the 90 as well. And yesterday we had 91. So it is obvious, I think it's obvious, I think you agree with me, guys, that we have a resistance in the 90s. We're gonna, out of the 90s area, we're gonna use yesterday high as our resistance. $10.91. So my plan for today, of course, after finding support at a retracement level here, and after breaking a falling trend line, the technical analysis of the situation is bullish. So I will definitely prefer to go long, not short for today, definitely. So I'm going to try a long if we drop to the initial support here, 1046, or another long if we try to break above 1091. Okay, guys, let's start building this strategy. I know you love this part because it's where the money is, right? If we talk about support and resistance all day, but don't specify exactly where we want to be in the market, then it will not make us money. But once we specify where to get in, if we are good with that, we are going to start making money immediately. So guys, if we drop to 1046, I want to be in. So buy at 1046. Now the stop if you want the truth, the stop should be below 109.79. And I want to see if the risk management part of my strategy can handle that. How about 20 pips below that? It is 9.59. 87 pips, well, it's a little bit more than I want, but it's still within reasonable limits. Now, the target for today, I'm going to give you two targets. For target 2, I am really excited about 1208. I'm going to show you why in a little bit. But let's look for a closer target. If we buy at 1046, then I believe we can, of course, use this high, this top here, as a target. For you guys who don't want to wait 100 pips or something like that for a target, you guys love the 40 and 50 and 30. So target 1 is going to be 97. Then 97, 51 pips. Yeah, I believe that is good enough. Is that good enough for you guys? Okay. So this is the first recommendation for today. I will have myself another recommendation, and it's going to be another long recommendation. So if we do not drop to the 40s and start moving higher, I want to be in the minute we touch yesterday high, because when we get there, we will start pushing to the upside, trying to break the 90s, and I want to be in when we start doing that. I'm not going to wait even to break above the 90s. I am very excited about the long. I want to be in at yesterday high. So buy at 1091. I'm going to place my stop here below this support, 1027. Let's say 20 pips below that at 1007. 1007. Target 2 is also going to be 1208. I'm going to show you in a little bit why I care about this level so much. But for target 1, let's look. We need to look for something closer than that. We need to be around 1140. So maybe let's try and calculate the retracement levels for this drop from this top here to here. Yes, we have a new low. We should use the new low for our calculations. And I'm going to use the 78.6. Let's see if that is in the area where we want it to be. It's at 27. What do you think about that, guys? Is that enough? 27. No, I'm going to push it up a little bit. 35 pips. I'm going to 46. Yeah, this is something. 1146. This is good enough for a first target. So there you go, guys. These are the recommendations for the euro for today. I'm not going to issue a short recommendation for now. Why is that? Because we need to break 3 support levels before we can justify a short position. And well, once the price starts trading below 109.79, it may be exhausting its daily range. And I don't know if it can move lower than that for the day. Of course, a break below such an important support like 109.79 should result in a move to the downside, but maybe not immediately, because we have seen we are now trading in the 1070s. To break the 979, we need 120 pips below current levels, and when we get there, maybe it will be too late for today, but we'll see about that tomorrow in case this huge surprise happens. Of course, I do not expect this to happen. I expect that we will move to the upside, or maybe we'll drop to the 40s first and then move to the upside, but not below the 40s. I don't expect the price to trade below the 40s, maybe just a little bit to scare you guys. The market loves to scare us from time to time, of course, we know that. But I do not expect in any way a break below 109.79 for today. Still, it's a market, of course. It can happen. Anything can happen, even against our expectations. So guys, these are the recommendations for the euro for today, and I'm keeping my fingers crossed because this is the first recommendation I'm going to give you for today, guys, for this week. So I'm going to go immediately to my QTimeFX account and place these recommendations. Okay, so we are going to place two buy orders, a buy limit and a buy stop. The buy limit is going to be at 1046. Let me remember where's my stop. It's at 959. And my limit is going to be 1097. And place. There you go, guys. This is the first trading recommendation for this week. Buy euro at 1046, stop loss at 959, and the limit at 1097. Now the second is going to be one that is there in case we don't move down first, if we start moving to the upside immediately without dropping to the 40s first. And as you see, guys, we are going to get in at yesterday high if we start moving to the upside. 1091, our stop is going to be 1007. Our limit is going to be 1146 and place. This is the second recommendation for this week, and I'm hoping for the best with these two recommendations. Of course, guys, I have to remind you that these are two recommendations that pointing in the same direction, and when we have such recommendations, we only use the first one that is triggered. What do I mean by that? We now place the two orders, but you guys need to watch the market. Once one of them is done, you need to cancel the other. We don't want to have that kind of risk of having two positions in the same direction. Okay, what I want you to is to manage your risk in a professional way. And I don't want you to be handling too much risk on your own, because you only meet for 3 hours a day and then you are on your own for 21 hours. So what will you be doing after that is up to you, but you need to manage risk. Okay, guys? So if we get our order at 91 triggered, then we go and cancel the order at 1046. And if we get the 1046 triggered, then we go and cancel our order to get in at 1091. Capiche? Is this clear, guys? If you have any question about this point in specific, please do post them in the chat, and I will be looking at your comments in just a minute. So now we have the two recommendations for the euro. No short recommendation for today, and we are holding on to that hope that the euro is going up, gold is going up, the dollar is going down, and we want to use that move to make some money this week. So before I move to the second instrument for today, I want to take a look at the chat. I tried to be the first one who writes a comment today, but Ajuri, Exalted Ajuri, got there first, and with a nice comment. Good day to you too. My comment is second. I said hello everybody and welcome to today's webinar. We made 68 pips of profit with Friday trading session. How much we will be making today, come find out. So we are hoping for the same kind of performance for one more day. The guys from FX Educast are welcoming you all. Of course, the best team in the world, the most professional, most friendly team in the world, and they will be helping you if you want to open your account with QTimeFX. Of course, you need to contact us at FX_Educast via Telegram. The most professional, the most friendly team in the world is there waiting for you to help you. If you have questions, we're going to answer these questions. And if you want to help in any way in opening the account, we are going to provide you with that help. Yes, we took a break on Monday and now we are back. Ryla, hello sir, this is my first time here. Welcome. I'm very happy to have you with us, and I really hope that we will welcome you with some profit today, so you come back again tomorrow and the day after and so on, and you tell your friends about QTime FX and FX Educast. After a few years of self-taught trading, I've realized that you need some guidance and the community to share knowledge. Of course, I completely agree, especially in the beginning. For beginners, to have that group of support around them may be helpful. What you hear from here or there, sometimes it's not very helpful, but most of the time it is helpful. What you hear from here and there can save you some mistakes and can give you some knowledge that you as a beginner will not be aware of. But having someone with experience on your side, someone with 19 years of experience, for example, is something that can help you avoid a lot of the mistakes that every beginner goes through. Every beginner, guys. Jesse Livermore, the greatest trader who ever lived. He's an unbelievable legend, and he lost all his money on his first attempt in the financial markets, because this is a field of knowledge that you cannot understand completely with a course that is 1 week or so. You need to put much more effort than that. Michael Marcus, the man who turned an account from 30,000 to 80 million, he also lost his whole account on his first attempt. So, to come to this unbelievably vast market as a beginner, thinking that you can make it on your own just because you have read a couple of pages on a website about trading, is something that is completely wrong and will result in losses. 100% it will result in losses. I have no doubt about it. So you need the support, you need the experience, you need someone who has been in the market more than you did, much more, not just a month or 5 months or 6 months more. I want someone who is years older than you in trading to give you trading guidance. So I completely agree with this comment. Welcome, Delia. Am I saying your name right? Please let me know. Joshua. So is 1091 1.1091? Exactly, buddy. Exactly. And when we go to the account, of course, you can see the orders when we place them. You can see them yourself. So yes, 1091 it means $1.10 and 91 portions of a cent. Okay, guys. So the buy at 1091 is at 1.1091. Exactly, Joshua. Exactly. And I'm sure that you have seen, after we place the recommendations on the chart, we move to the account and we place our orders there. So you can see exactly the price that we are placing our orders at. So, buddy, when you see me writing these recommendations on the chart, just wait a minute. When we are done with the recommendations for each pair, we go to our QTime FX live account and we place our orders there in front of you, so you can see the exact price we are placing the entry at, the exact price we are placing the stop at, the exact price we are placing the limit at, in order to avoid you of any confusion, any misunderstandings. Okay, so Joshua, please keep your eyes on the screen here. After we're done with each pair, we go to the account and we place our orders there, and it's going to be very easy and very clear for you, buddy. James, hi guys. Hi back, James. How you doing, buddy? How's it going today? It's going great so far. And of course, we are going to talk about not only market analysis, we're going to talk a little bit about some trading strategy. I think we started talking about it a couple of weeks ago, but we did not finish it because of the time. We did not have much time back then. We talked about a lot of instruments. We talked just a little bit about it, but not in the details we're going to talk about today. So every hour, I'm going to include about 15 minutes of explaining this strategy. And I'm going to go to the strategy immediately after we finish the comments here. Black Zero, I don't know what to do. Someone help me to understand this situation. Can you please explain, buddy? If you are looking for trading recommendations, you can see what we will be doing for you here. We are achieving profit almost every day, on most of the days. Of course, nobody makes profit every day or in every trade. Nobody in the world does that. But we are achieving profit almost every day. Most of the days, we are very happy about the results of the recommendations that we give away 100% free in these webinars. So if you're looking for that, hang on. If you're looking for strategy, we are going to be talking about a strategy, one strategy every day during this webinar between the instruments that we analyze. And if you want, if you are talking about the bonus or the promotions that we are having now, the team from FX Educast will be very, very helpful. Please shoot any question you have in the chat and they will be answering you. Can I ask you also? Of course, James, you can. Go ahead. If you are asking about promotions, the guys from FX Educast will answer you immediately in the chat. If you're asking about the market, I will be answering you. So go ahead and ask anything you want, buddy. Okay, so with this, guys, what we are going to do right now is this. We are going to talk about a strategy for today, and I'm gonna split talking about the strategies for about 10 or 15 minutes every hour to keep you from getting bored. So trading techniques with FX Educast. Our website, of course, is fxeducast.com. Our broker is QTimeFX, and we are providing you with these techniques, with these sessions, because of the sponsorship of QTimeFX. Today, Fibonacci and other retracement levels. This is what we will be talking about for today. I know we talked about it just a little bit, but we did not finish it in the past. Now, I'm gonna start talking about it again. So, what are retracement levels? They are support or resistance levels. We use a percentage ratio, or not one, of course, many percentage ratios, and we calculate these ratios in relation to the previous move. So if the market goes up, for example, 100 pips, and then it starts dropping, I want to see where is a good support where I can get in the market with a long position, hoping that the market will go up again, because it already moved to the upside 100 pips and then it started dropping. So now when it starts dropping, that means if I'm convinced, of course, that the direction of the market is to the upside, I want to be looking for support to buy at. So how we do that? We use these percentage ratios to calculate support and resistance. For example, we got up 100. One of the most used ratios in retracement analysis is 50%. So after dropping 50% of the previous move, which is 100 pips, that may be a support to buy at. 50% of course of 100 is 50 pips, so we go up 100, we drop 50. Now after we drop 50, I want to see, is this a support to buy at? Is it a good level to buy at or not? Retracement analysis is extremely helpful in this specific task. He's probably the first man who talked about retracement levels. Charles Henry Dow, the father of technical analysis, at least in the Western world. And he said that he noticed that corrective moves, or the reactions after a move in the direction of the main trend in the market, usually terminate around 1/3 or 2/3 of the previous move. And if we want to make these numbers into percentage levels, of course, they are the 33.3 or the 66.7 levels. Jesse Livermore, the man we were just talking about just a little bit earlier, the greatest trader who ever lived, in my own opinion. He's just, his whole life is a fantastic story up until the end, because it ended in a very sad way with him taking his own life in a room, in a hotel room, away from his family, in spite of all the success that he made, all the money that he made. He made a profit like nobody else in history. If you translate the number, the amount of profit he made into today's money, he made more than 1 billion in current US dollar value in one trade. So you're talking about a man who had everything he wanted. When we talk about the physical stuff, he had money to buy anything he wanted, and yet he was not happy, because this is a reminder that, you know, trading, success, making money, of course it can improve the life of everybody. Anybody who can get more money will be happy, will be spending their money in a way to make them happy, with family, buying things that they want, going to places, very nice places, very fancy restaurants, tourist destinations that are beautiful. Spending your time around is something, of course, that is very enjoyable. I know that when I make profit and I withdraw the profit and I spend it, I feel great. But even with all the money he made, he ended his own life in a very sad way, which is a lesson to all of us that no matter how much money or success you have, if you don't have healthy relationships with people around you, with your family, with your wife or husband or boyfriend, girlfriend, your mom, your dad, your brothers and sisters, if you don't have that, then all the money in the world will not make you a happy person. So first and foremost, we need to care about the quality of our life as human beings, social human beings. We need people around us to have healthy lives. Every scientific study said that. People with friends even have longer life expectancy. People with problems with people around them, family or loved ones, they tend to have depression or to face some medical problems. So Jesse Livermore, my absolute favorite trader in the whole history of humankind, talked about the 50% level. He said that he loved the moves that split the previous move in half. This is exactly his words, in half. He used this term, and of course, in percentage, it means the 50% level. And we come to years after that. Dow was famous in the 1890s. Livermore started trading just after the 1900 year. In 1906, I think his first big success was in 1906. And he traded until the 40s, until he took his own life. In the 30s, we have Ralph Nelson Elliott, a man who studied the whole history of the American stock market from initiation until his time. And he was the first man, the first analyst, the first author, the first researcher to connect the market to Fibonacci levels. He said that he have noticed, of course, this is the man behind the wave principle. That's why we call it Elliott wave, because his last name is Elliott. We call it Elliott wave, but he himself called it the wave principle, not the Elliott wave. So he's the man behind the wave principle. And he said that we have impulsive moves, waves he called them, and corrective moves, also he called them corrective waves. And he said that there's a relationship between the correction and the impulsive move that tends to be around Fibonacci levels. Even he said we have 5 moves to the upside, in an uptrend, and 3 moves to the downside. And of course, these are 2 Fibonacci numbers. 3 is a Fibonacci number, 5 is a Fibonacci number, and the ratio when you divide them is very close to the 61.8 Fibonacci number, the most important of the Fibonacci numbers. And of course, we had another Fibonacci number, which is the 38.2, and he had the 50%, just like people before him, especially Jesse Livermore. So guys, this is where these retracements came from, and not to make you bored, I'm gonna continue to talk about them the next hour, not immediately. Now we are going to have a break, and after the break we will come back to enjoy more conversation about the market. Before I go, I want to give a huge thank you to QTimeFX, the sponsor of this webinar. Guys, this live stream is sponsored by QTimeFX. Like always, like every day, it's going to be sponsored by QTimeFX, and there's a reason for that. QTimeFX wants you to make money. They are the kind of broker who loves profit for their clients. Some brokers, of course, you know, there are different kinds of brokers. Some make money when you don't. Some make money when you do. So to show you what kind of broker QTimeFX is, they want you to make money, guys. They are sponsoring these webinars free of any charge for you. They are, I'm going to be frank with you guys, they are paying me a lot of money on your behalf. So I come here every day and I spot the best opportunities in the market, so you can make 68 pips a day like we did on Friday. And hopefully we're going to repeat that again today. So that's how much they care about you. And they are offering you a maximum leverage of 500 to 1 and fantastic spreads, guys. Imagine yourself trading with only 0.4 of a pip on the euro dollar and the dollar yen. And with these fantastic spreads, they got the award for the lowest forex spread broker of 2018 by ACIFMA. And to top that, of course, a lot of, if you look around online, you're going to find a lot of brokers offering good spreads, but a lot of them are charging you commission for the good spreads they are offering you. What's the point? But QTimeFX, the guys there, they do not do things like this. They are offering you these spreads and zero commission. How about that? I love that. As a trader who has been in the market for 19 years, I really love this trading condition. Trading with such fantastic spreads and no commission. I love that. And to make you feel good about your money, of course, we keep our client funds segregated in UOB, which is ranked in the 22nd place in all of the world, guys, in the World Bank ranking. That's really, really great. And of course, we have the promotion everybody's talking about. Open an account with QTimeFX and get $250 in bonus or $500 in bonus, depending on your deposit. If you deposit $150, you are going to get $250 in bonus. If you deposit $300, you are going to get $500 in bonus, guys. And of course, there's a requirement for that. You need to trade with us. It's not that you can only deposit then withdraw. That of course would make us subject to abuse of some traders who look for these opportunities to abuse brokers. So we want to keep you with us. We want you to be our clients, and we will give you the bonus. Equity can be withdrawn after achieving a number of lots that is equal to $1.5 per lot. So in order to withdraw the bonus, you need to trade a certain amount of lots. But there's a very important thing, guys. There's a very important thing. To get these promotional benefits, you must contact FX_Educast via Telegram. So if you have Telegram on your mobile, go ahead and send us a message. If you don't, you need to download it and send us a message at FX_Educast via Telegram. And the most friendly, the most professional team in the world. The guys at FX Educast. I love them very much. I've been dealing with them for a long time, and I know them, and I know how professional and friendly they are. They are going to help you with big smiles on their faces. So don't hesitate. Send us a message at FX_Educast via Telegram immediately, and let's open an account for you, a real account, where you can start applying these recommendations and making real money. Not demo account money, guys, real profit. I want you to do that. I want you guys to make real profit. That's why I want you to open your account right now with QTime FX and start applying the recommendations that I will be giving you today and every day on a real account, making real money, real profit, something you can withdraw. Okay, people? So with this, I'm going to leave you guys for a few minutes, a short break, 5, 6, 7 minutes, something like that. And I will be back to talk about today's trading technique, retracement levels, and of course, more analysis, more pairs. So see you in 5, guys. Okay guys, we are back. Welcome again. How's everybody doing? I hope you had a nice break, 5-6 minutes, something like that. Got yourself something to drink. And that you are ready to continue with what we are doing. Okay guys, so the first thing I'm gonna do this hour is that I'm gonna continue talking about our technique for today, and that is of course retracement levels. I want to give you an example. I'm going to show you examples during this hour. I'm going to show you examples from screenshots, and the next hour I'm going to show you examples from live charts. So this is the euro against New Zealand dollar hourly chart. As you can see, we have been moving to the upside. Some indications that this is the direction in the market to follow include a breaking above or crossing above the moving average band right here, and then we started falling again. Another indication that the market is going to move to the upside is this three-sided move, three legs, okay, three waves if you will. And when you see a three like this after crossing above the moving average band, you may be interested in a long position. So you start looking for of course, support and resistance. Support in this case to buy at the support. And when you calculate the retracements for the previous move, you can see that the 61.8 Fibonacci level, the most important of all Fibonacci levels, is here at 65.74. And as you can see, guys, the price dropped almost exactly to this level before skyrocketing. Now, another example, this is the 4-hour euro-yen chart, and after dropping, of course, this is with this kind of move, you can expect that this is the direction in the market, and you would look to sell, not to buy, because you know, you want to be on the side of the trend, right? So after this important and strong drop to the downside, a recovery attempt took place, and this recovery attempt topped very, very close to the one of the most important Fibonacci levels, the 38.2 level. And moreover, it came in a three-wave sequence, which adds to the confidence in a drop. So this is a resistance here, and of course after that a drop took place. What I want you to understand, guys, what I want you to really keep your mind on is that there's a golden rule that I follow, and I know not a lot of people believe in, but I want you to follow it because it's very protective. It can help you avoid a lot of losing situations. First, I'm going to tell you what is the rule, then I'm going to explain myself. Well, the rule is that you do not buy or sell just because the price touched a retracement level. I know a lot of traders who do things like this. Once the retracement level is touched, they are in the market. For example, here, once we got to the 38.2, come on guys, sell immediately without waiting for any kind of confirmation, any kind of some technical study. No, it's touched, so we buy. But there's a problem with this thing. And the problem is that we have many retracement levels. If we had one retracement level, that would be an easy thing to do. Yeah, that would make sense, but it's not like this, guys. If we touch 38.2, we might continue moving to the 50%. And in that case, if you sell in this example here, if you sell here at 38.2, the price can easily go to the 50% or 61.8%, leaving you with a lot of room for loss. A lot of dollars lost in this area. So in order to avoid this problem, what you need to wait for is a confirmation that the market has turned. And we need a confirmation not in the form of only touching a retracement level. That's not a confirmation, guys. We want two things to happen. First, we want the price to touch one of the key retracement levels like 38.2, 50%, 61.8. I'm focusing on these three. But of course, there are more. For example, we have the Dow, 1/3, 2/3. We have the harmonic retracement levels, 78.6, 88.6. And there are also other retracement levels, for example, 71.4, that I really, really love and I have discovered, and I'm very proud of that discovery. So if we get to the first one, 38.2, for example, you want to get in the market. What if the market moves to the 50%? You will be in loss. And if you decide to get in at the 50%, what if the market moves 61.8? So in order to make these losing situations a minority, to keep them at a minimum, what you need to do is to wait for confirmation that the market has turned. And that can be in a number of ways. Indicators can be very helpful in this. For example, here, once we touched the 38.2 and we started falling, the RSI itself was above 70% and it started falling. So once we depart from the overbought area on the RSI with the top very close to Fibonacci level and the price moving to the downside, that is better. That makes you a better, of course it makes you a better trader, but that gives your trade better chances of making it to profit, and compared to getting in immediately when the market touch any retracement level. With the touch of a retracement level, it's not a reason to get in, it's a reason to keep your eyes open, looking for signs that confirm that getting in this area is something that could very much provide you with a good trading opportunity. And this is, of course, what we are looking for. Everybody is looking for good trading opportunities. Okay, guys? So one of the things we can use is indicators. Another thing is candles, and I really use candles all the time. After touching a Fibonacci level, what I want you to focus on is the candle chart, and I want you to look for examples on candles, or patterns. Let me say patterns on the candle chart to give you a reason to believe that the market has reversed at this Fibonacci level. We got high here. Now, if we get, for example, a shooting star or a bearish engulfing or a doji, that would be a good reason to get in very close to a Fibonacci level. So this is it, guys. This is what I wanted to talk to you about for today. I'm gonna show you in the next hour. I'm gonna, of course, I don't want to give you everything in one session, so that's why I'm dividing the technique talk into sessions that are divided. Each hour I'm going to spend 15 minutes or so talking about this technique. So for now, what I want you to know is that just touching a retracement level is no reason to get in the market. You need to wait for confirmation from the price itself, from indicators. It might be breaking of a trend line. It can come from candles. It can come from indicators. We will talk about this. I'm going to show you real examples on the chart, live on the chart, of this situation and how to use it. Because, as I said before, guys, I don't want to give you a fish. I also want you to learn how to fish yourself. And that is why I want you to be here. I want you to watch what I'm going to do on the chart live during our third hour. So for now, this is it for the technique. We are going to go back to our charts, of course. And we are going to talk about another instrument. And this instrument is gold. This is from yesterday. I did grow this trend line yesterday. I was waiting for a break above this trend line and moving average in order to confirm a move to the upside, and we are moving to the upside. But the thing that is really bothering me about gold is that it has lost its energy. I mean, even when you are talking about a move to the upside, yes, the market is moving to the upside, but it's hardly creating a moves of 100 pips or more. I mean, this is gold. If gold is going to start trading with the daily ranges of 100 or 80 pips, what is the thing that we are going to trade? We want action, we want movement, and I really hope that gold will go back to the way it was trading a few weeks ago. It was very exciting to trade. The direction was obvious, of course, because of several reasons, including the Fed rate cut on the dollar 3 times, from the first of which was on July 31st. July 31st, I'm going to show you where was the price on July 31st. No, month. It's not month. I wanted the daily chart. Okay, guys, this is it. This is it. Here we got our rate cut on the dollar, and as you can see, of course, the dollar and gold are not very good friends. They are foes, and that's why when there's a rate cut on the dollar, the precious metal will be expected to rise, and vice versa. If the dollar gets a rate hike, then the precious metal will be expected to dive. So this is what has been happening since the rate cut on the dollar. I made very good profit on this move. I'm very happy about it. Now a correction, of course, should follow such a very, very strong move. Not one. Here we have 2 corrections, ABC and then wave X and then another ABC. Inside this ABC, we do have a complete and obvious 5-wave count with extended 3. Very, very nice wave count here, which ended at a Fibonacci level. At a Fibonacci level. I'm going to use this example, guys, when we talk about the examples in the third hour. This is one of the examples. At a Fibonacci level 1446. We got to 1446, and the same day we jumped more than 100 pips, and then we continued moving to the upside, reaching more than 300 pips to the upside in a matter of a few days. Something that Fibonacci or any retracement level can do, actually. And because of finding support at the Fibonacci level, we were just talking about this only minutes ago. Because of finding support at the Fibonacci level, we expect the direction of the market to be to the upside. Of course, this is one of the reasons. It's not our only reason. We have several reasons. We have the corrective moves pointing to the downside, finding support at the Fibonacci level, a doji here on the daily chart. Everything is pointing to the upside, and we are still waiting for these, very exciting moves on gold. We have been waiting for a while. When this happened, I got very excited. I said, whoa, yeah, this is it. When this happened, I said, yeah, this is it. But each time the price dropped again. So we are trading in the 60s, 50s, 60s. And we have been doing so for a while now. I hope that the market will finally move in the right direction and to the upside. So we're going to analyze the short term. This is the daily chart. No, I want to see the hourly chart. And I'm going to take a look at some indicators. First of all, as you can see, guys, we are having a shift here. A shift in the dynamics of the market, let me say. Stochastics indicator is very close to the oversold and about to generate a long signal. Not yet, but it's very close to doing so. So keep your eyes on the stochastic. At the same time, the RSI got to 40, around 40, just a little bit below the 50%, the equilibrium level, and then it changed direction with this move. And above that, guys, what I really like here is finding support inside the moving average band. You know me, right? You know how much I love my moving average band. I love it. I really do. So when the market's moving to the upside and then it drops, it's moving to the upside like here, and then it drops, and then it finds support very close inside or just a little bit above, just a little bit below the moving average band. That is an indication of a rising market. And I do believe that gold is going to continue moving to the upside for these reasons. Of course, it's not a personal issue, and it will never be a personal issue, guys. It's not personal. I follow technical analysis. If it says that gold is going up, I buy. If it says gold is going down, I sell. I have no issue with gold itself. I'm trying. I like these trend lines, especially this one. This one is, still in the making. We need to see a reaction from this bottom before we give credit to this trend line for providing support. Now, another thing that I want to calculate is the retracement levels. And I do think that we have a 50% here, which is fantastic. So guys, we have many reasons to believe that gold is moving to the upside. One of them is finding support in this moving average band. The other is that this drop here stopped almost exactly at the 50% level. 50% level is at 59.5. The low is 59.68. So guys, with this, of course, candle as well, we have three reasons to believe that gold is moving to the upside: retracements, candles, and moving average. Now we need to see a break above this trend line, or even maybe if we want to get to a little bit lower, to the 5-minute chart, we can use this trend line, and I like it. I do like it. If we break above this trend line, then we will be looking, of course, for an opportunity to buy. We can place our order just above this trend line, and this trend line we can consider it to be at this top, although it's a few pips above it. But it's a falling trend line in the next hour or so, this 5-minute chart. So we need an hour maybe, or something like that, before, yes, an hour before this top here becomes exactly equal to the trend line. And this top is at 62.3. So resistance, this is the first thing I want to leave on the chart, 1462.3. The problem is that we are very close to it. We may be not able to place our order above this trend line. In this case, if while we are analyzing gold, it moves to this area, we'll place our order above this trend line. In all cases, we have many reasons on the chart to support a bullish outlook, and we are going to use these reasons to initiate a long position. But we still need to care about the support. In my own opinion, since we found support here at the 50% level, we can use other retracement levels for the same calculation in order to use them as a support. The 85 point, not 85, sorry, I want the 88.6. Between these two, I prefer to use the 88.6 because it's very close to these bottoms here and here. 54.9. So support 54.9. Yes. And I'm gonna wait for a break of either. So let's just think out loud. What if we buy 10 pips above resistance and place our stop 10 pips below the support? Will that be okay? I'm afraid that will be just about 100 pips of stop, which is the maximum. Maximum, of course, for me is 99 pips of stop. I don't like 3-digit stops. So what if we buy at 1463.3 and we stop this position at 1453.9? Yeah, it is a little bit less than 100 pips, and that is okay for me. And you know, guys, what, because I'm very excited about the long, I'm gonna use only 5 pips above that, above the resistance, not 10, only 5. So if we get to 62.8, I wanna be long. And now let's look for targets. Long recommendations in blue, short recommendations in red. So targets, okay. Initial target, for an initial target, I want something like 50 or 60 pips, something like that. So here, recent highs, what about this top right here? 65.4, no, too close. Okay, for specifying the target, we may need to calculate retracement levels for the previous move. And I'm sure, guys, you know how much by now I love my retracements. Actually, 67.8 looks... this one here, the Fibonacci. Let me clear everything and show you which one I'm talking about. This Fibonacci level at 67.7. It looks very good as a target. Why? We have bottoms that are very close to it, and it's of course the most important Fibonacci level for the previous drop. So I'm going to use this 67.7, and to make it around 50, I'm going to add 1 pip. 67.8. We need to be extremely unlucky to see the price reaching 67.7, not reaching 67.8. That would be a story to tell. And now for the second target, no question about it. I am waiting for this retracement level to be tested. Here it is, guys. If this is wave C, the 71.4 retracement for wave C is at 1495.9, and at the same time it's very close to wave 2 of the wave 3 inside wave C. So the tops, of course, of waves 4 and 2 usually make good targets for the moves in the other direction. Even if this was only correction to the upside, reaching the top of wave 2 is a big possibility. And I really cannot wait to see this price on the screen. I have been waiting for more than a week, and I still believe we can get there. With everything that happened yesterday, I think we can get there. So this is the second target. And now what about the short? I want to sell at 53.9, although I do not believe we are going there. But of course, wise trader would be ready to use the market in any direction it goes, even against the direction of expectations. My expectations are, of course, to the upside on gold. But if the market shows me in a clear and clean way that it's moving to the downside, then I will follow that move. So the sell, of course, is going to be a reverse. Now for the targets, target 1 and target 2. Initial target is going to be close to 1446. Of course, we have found support there recently, so when we start dropping, it will be extremely hard to imagine the price not retesting 1446. So I'm going to use 1446, the recent low that we have seen recently, which is also a Fibonacci level, as my initial target. I know it's a little more than you like to see. You guys like your first target to be 40, 50. Allow me this time to push it just a little bit higher than that to 79 pips. And the second target, for the second target, of course, once we start trading below 1446, this is the 1446 Fibonacci level. Below that, we do have these tops in the 30s. I think 37.7. These tops here, can you see how close they are to each other? And maybe even this low here. Yeah, this is 36.93. This is 37.70. So we're talking about 7 or 8 pips between these remarkable daily extremes. So I'm going to use this one, guys, 37.70 as my second target. No. Okay, so this is it for gold for now, guys. These are my recommendations for today. I want to be long if we start trading above 62, and I want to be short if we start trading below 1454. Off to our Q Time Effects account, and let's place these orders. So 62.8, we are very close to that. Buy stop. Very, very close. Getting very close to, I hope the account will accept that. 1467.8. And our stop's going to be 53.9. And as you can see, guys, now we are ready to use the move to the upside on gold. In case it happens, it moves in the direction like we are expecting. And I want this one viewer to keep his eye on what is on the screen right now. Joshua, my friend, during the first hour you were asking about the prices we place on the chart and the prices to get in on these recommendations. To leave any confusion out, we move immediately to our trading account and we place them in front of you so you can see exactly the prices I want you to be in and out at. So we are buying at 1462.8 with a stop at 1453.9 and the limit at 1467.8. Okay, Joshua, this is for you, buddy. Now, what about a short position in case we break below the support? And 1453.9. Our stop is going to be 1462.8. And our limit is going to be, of course, 1446, a very important support. And place. And there you go, guys. We have a short order at 1453.9, stop 1462.8, sorry, and limit at 1446. And okay, so now we are ready to take advantage of what might happen on gold. Okay, people, with this we complete gold, our analysis for gold today, and we are going to move to another instrument. How about the yen? Yes, the dollar yen. Let's talk about that for a minute. Guys, you know me, I was a yen bear, dollar yen bear, not a yen bear. And I was expecting the price to drop from levels that are just above 109.37. I said we will not get too high above that. On Friday, we placed an order to buy 30 pips above it, and we stopped only a couple of pips below that. Yes, we stopped at 65. Our order to buy was a few pips above that. So after that, of course, finally the expected thing happened, and the price started falling. With this drop, we can now estimate the chances of us being right about our view. Of course, I have a very bearish view for this pair. I'm talking about to drop to 104 or below that, guys. So we're talking about 500 pips from current levels. 500 pips from current levels. I really believe we can get there. And I want you to remember me if we get there. When we get there, remember me and smile and say, well, Munther talked about these 500 pips way before they appeared on the chart. So of course, for 500 pips, I'm not expecting this to happen within a day or a week or even a month. But in the near future, in the next number of weeks, I do expect that we will get to 104. Now, what has been happening, of course, this was a scare, and scares happen all the time, guys. Whenever you specify an important level, sometimes the market pushes just a little bit beyond it, because it's a battle, of course, between bears and bulls. And, the losing party in this fight sometimes try to show that they are not losing. They want to push, they want to try, and then they give up. And this is what happened here, in my own opinion. So we were expecting in the 30s, 40s, something like that, to see a top here. It got pushed to, yesterday the high was 73. And I wish we were here yesterday. I would recommend the short just when we started falling, maybe at 50 or something like that, to use this drop here. We could have been swimming in profit right now. Nevertheless, we are meeting most of the days, and we are going to try our best to make profit for you guys almost every day, like we are doing right now. We are making profit almost every day. Very successful webinar series so far. Where is the support that we need to count on for today, and the resistance, of course? Let me try. What about this? I want to clone this and see what happens. Yes, I'm cloning things right now. And no, okay. How about retracements? Well, this could be complete. The move from this bottom here could be complete, in my own opinion. Even if it's a C or the final C in a complex correction, like it is apparently looking here, it can be divided into 5. And I really believe that this is the 5. This is the 5-wave sequence to the upside. And we also even have a clear 5 inside 3, which is something very exciting. If you are an Elliottician, I'm sure you will love this. This is very clear wave count, extremely clear. I'm gonna just color them in different colors. Very exciting, guys. So with these 5s pointing to the upside, we have now a reason to believe, of course, in the downside, and to be careful about moving to the upside. Why am I saying that? Because C waves, the final waves and corrective moves, come in 5s. So when you divide them, when you go to the subwaves, there are 5s. And this is a clear 5-wave sequence pointing to the upside, which is fantastic for our analysis. Why am I saying that? Because now we can count on the retracement levels for the whole 5-wave sequence to give us indication about the direction. I really believe we're going down, but of course I'm ready to change my mind if I find enough evidence on the chart. Now this is 50% level, we have already tested it. Now what about 61.8? The 50, here's the 50. Okay, 61.8. I don't want to be stopping at any of these levels, guys. And as you can see, we have the 78.6 level very close to this rising trend line. It's very, very close to it. It is at 108.57. So 108.57 is going to be very important for our outlook, not for today, for the outlook as a whole, guys. So support 108.57. I'm gonna place that in a separate row because we will have a number of support levels to talk about. So this is the first thing that I want you to care about. 108.57. Now here we have tested the 50% level and started rising. As you can see, guys, once we got inside the moving average band, weakness appeared again in the form of this red candle. So now I can say with comfort that if we start trading below the 50% again, this drop will continue. 50% is at 108.99. So 108.99. This is going to be my immediate support. Okay. Now what about the resistance? Of course, the resistance, we have the 37 first. But we can do more research today and use retracement levels for this move to the downside. And out of all these levels, first level I want to check is 71.4. In these situations, I really believe in the power of this level. And I'm going to use it as my resistance. 109.49. 109.49. So I'm going to place this as a resistance. And I'm gonna follow the break of either this initial support here or this resistance. I'm gonna use these two levels to build my trading strategy for today. Guys, we are in on gold. Gold is pushing to the upside. Our order to buy is triggered. As you can see, the market's moving to the upside. Woohoo! We are already trading above this falling trend line. Now we have another trend line to take down and continue moving north. Keep your fingers crossed. This signal is going to make us good money. Okay, guys, so back to yen. I'm sorry, I had to tell you about this. So let's build our trading strategy depending on 108.99 and 109.49. Of course, guys, if we are in a short position and we see the price touching or getting very close to 108.57, we want to be careful about that because that level can actually provide very good support. On the other hand, of course, if we start trading below 108.57, that would be fantastic for our short position. So let's start building this trading strategy. Now, sell, it's my favorite, of course. Sell, once we start trading below 108.99, I want to be short, and I'm not going to wait for more than one single pip below that level because I'm very excited about the short with the failure here in the moving average area. Now, for the stop will be, of course, above 109.49. Let's say 20 pips above that, 109.69. Okay, that leaves us with 71 pips of stop loss. That's okay, especially that the pip value of the dollar yen is less than other instruments like gold and euro. So 71 pips is a good stop. It's almost ideal. Now, what about the limits, guys? Okay, so if we use 108.57 as an initial target, that would be 42 pips of profit. I'm gonna round that to 50. Just a little bit of a push below 57. That will be our initial target, and our second target will be much more than that. If you can wait, you are welcome to wait. If you are the kind of day trader who wants 40 pips here, 35 there, and to get away with these profits here and there, that would be a good idea if you use the initial target, 108.48. So target 2, let me look for a target here. Yeah, this makes absolute perfect sense. This bottom here from which this probable ABC started, this looks like an ABC. I have to count the waves within these two moves to be sure about that, but this part is crystal clear. It can easily be a C wave. Of course, for that we need to break support levels. If we don't break support levels, then it might not be a C wave. It might be an impulsive wave to the upside. So keep your eyes on the chart. We need to start breaking support levels. So second target, I'm going to use this bottom here, guys, 107.87. Now, how about the buy? In case we break above 109.49, I want to be long. I really hope we don't, but if we do, I am definitely going to buy. 20 pips, I'm going to wait 20 pips above that resistance because the overall technical outlook is bearish, especially with the dollar weakness seen in the past 24 hours. We need to keep the big picture always in front of us. So the big picture is bearish for the dollar, and that's why I'm not going to use only 1 pip above the resistance like I did with the support, but I'm going to wait for 20 pips. If the market can push 20 pips above our resistance, then that would give me a good reason to go long. That's why my buy will be at 109.69 in case we reach this high. Now stop, guys. I'm gonna place my stop at, of course, 108.98. I have to, and then I'm gonna look for the two targets. Target 1. Remember 10.13, it's a retracement level we talked about many times, and our second target is going to be, I think we also have a 10.70. I'm gonna show you why I care about these levels in a minute. If we go to the daily chart, this is your 10.13. It's 71.4 retracement for this whole move. And what's the next retracement? It is 10.70. Yes, these are our targets in case we start moving to the upside, which is not expected, but of course it can happen. It's a market. It moves against expectations. Many times you're going to see that. So don't think that just because we are expecting a drop, that means a drop is certain. Nothing is certain in this market. So we need to be prepared and ready to use any direction that we see in front of our eyes. If the market moves to the downside like we expect, that would be great. But if it moves to the upside beyond our resistance, we should open a long position against our outlook, but not against the concept of technical analysis, because technical analysis says when you have a move to the upside, breaking, penetrating resistance levels, that means it is probably going to continue. So these are recommendations, guys, on the chart, and for Joshua and everybody else, of course, we place them on the trading platform on our QTime FX live account. So sell at 108.98. Sell stop 108.98. Our stop is 109.69, and our profit or take profit is going to be 50 pips exactly 108.48 and place. And this is for you, Josh. Take a look at this. You will understand the prices no matter what abbreviated prices I place on the charts. Okay, so sell at 108.98, stop at 109.69, and take profit at 108.48 and go. Now, what about the long position? We will place an order to buy in case the surprise happens and we trade above 109.49. In this case, I want to be long at 109.69 with my stop at 108.98, and my profit, my take profit, is at 10.13. Okay, people, and place. Okay, guys, with this we come to the end of the second hour. I can't believe it's 2 hours already. I am spending a very nice time with you guys, enjoying it very, very much. And that's why I'm going to take a short break, 5-6 minutes, something like that. Get myself something warm to drink. It's getting cold here. I don't know about where you guys are living, but in my country here, we are starting to feel the cold. So I'm going to get something warm to drink and come back to you in a matter of a few minutes. And before I go, I want to remind you guys that you are enjoying this live stream freely without any charge because of the generous sponsorship of QTimeFX, our favorite forex broker in the whole world. Guys, QTimeFX is the broker who won the award for lowest forex spread broker of 2018 by the ACIFMA. And of course, that's obvious why. Just look at the screen. 0.4 of a pip on the euro dollar and the dollar yen, and similar tight spreads on other majors, very close to these numbers, these very, very good numbers, with zero commission, guys. And that is, of course, the best part, because if you get yourself some good spreads and then you need to pay commission every time you get in the market, then that's not a very huge advantage. I'm sure you agree with me, guys. With QTimeFX, they are offering you fantastic spreads, zero commission, segregated client funds, and UOB, which is ranked in the 22nd place in World Bank ranking. That shows you how much QTimeFX cares about you. They want you to feel good about your funds. They want you to feel good about your spreads. They want me to come here every day and show you the best trading opportunities in the market. And to top that, guys, we have our promotion now, which is, it's a huge success. Everybody's talking about it. Open an account with QTimeFX and you can get up to $500 in bonus. Real money, guys. Real green American dollars, which you can withdraw and spend in any way you like. Take the missus out for a nice romantic night or a comforting weekend away from the city, and spend those $500 and come back on Monday fresh. Or you can buy that gadget you have been looking at recently. Spend them in every way you want. We want you to withdraw these $500. We want you to enjoy them very much. And we also, even if you don't want to deposit a lot, we have the 250 bonus waiting for you. If you want to deposit a smaller amount, $150 gets you the chance to get yourself $250 in bonus, while a deposit of $300 gets you the chance to get $500 of bonus. Guys, withdrawable money, of course, you can withdraw them, and we want you to withdraw them. But of course, guys, to get all of these promotional benefits, you need to contact us at fx_thecast via Telegram. Okay, you need to. So send us messages now, send us your questions, your requests for help, anything you want. The team from FX Educast is very friendly, very professional. They will be there to help you with anything you want. So don't wait, don't hesitate. Open your account and start applying these trading recommendations on a real account. Don't waste your money. Don't waste your time trading demo money, guys. Demo money is not exciting and it's not going to show you how the market works. You need to feel the pressure of trading real money, to understand markets. Believe me, I have been in the market for 19 years and I know exactly what I'm talking about. So don't trade demo, don't waste your time. Come open your account with us and follow these trading recommendations that we give you on a daily basis. And I'm sure you are going to be happy trading with a fantastic broker like you, QTime FX. With this, guys, I'm going to take a short break, the second and final short break of the day. And in 5 or 6 minutes, I'm going to be back with more to talk about. Of course, we're going to talk about the trading technique that we have been discussing today. I'm going to show you real live examples on the chart, and I'm going to analyze more instruments. I'm going to give you recommendations for more instruments. Up until now, we have gave recommendations for euro, gold, and the dollar yen. After the break, we are going to give more recommendations for more instruments. So stay tuned and see you in 5, guys. All right, guys, how's everybody doing? Hope you're doing great. Took me some time to get myself something to drink, and I'm back. I hope you guys are here. I hope you are waiting for more trading opportunities. I got myself something warm instead of that t-shirt that I was wearing. So I'm back, guys, and let's continue. Let's go immediately to the charts. Okay, we talked about euro, gold, and yen. Now let's start immediately with the pound. And later, we are going to continue, of course, talking about the trading technique that we have been talking about today, which is using retracement levels for trading. So, guys, the pound, yeah. Let's see what the pound is doing. Okay, all right. It is obviously in a bullish situation because of breaking this trend line, which took place yesterday. During the American session, we were trying to break this trend line and we pushed higher. Then we dropped and found support very close to this trend line and above the moving average band, which is obviously bullish. I'm sure you can see for yourself what the market is doing. I'm gonna focus on the chart here, and guys, yeah, as you can see, the price is already 40 pips to 50 pips above the trend line, and that is something. Of course, that says something. That says that the bulls are winning. The bulls are achieving the kind of profit they are, or at least they were thinking of achieving. And as you can see, guys, they are getting what they want. So it's a bullish market. With the break above this trend line, I really believe that this will continue, and maybe finally we are going to get to the levels we wanted to see, above 30.13, which of course was reached recently. Now I'm gonna take a look at the daily chart, and I'm gonna show you what levels we should be caring about from now on. Of course, this drop has been corrected with a good percentage. Now what we need to see is if the resistance levels which are provided by retracement calculations can stop the bulls here or not. As you remember, guys, I talked about 71.4, my own retracement level that I really love, my own discovery that I'm very proud of, as a resistance. And as you can see, it provided unbelievable resistance in the past with stunning accuracy. For example, here the daily high is 76, here it is 73, here it is 85, here it is 70, here again it is 70. So I have zero doubt that 29.75 is the resistance we need to care about. And once we start trading above this resistance, then we should be able to reach the next retracement level. In this case is 78.6. I want to see where these levels are. 78.6 is at 30.77, guys, as you can see, and the 88.6 is at 32.19. So are we heading there? In my own opinion, once we break 29.75 with a good number of pips, that's it. We are moving to the upside after this pause, and this pause can be counted in a very, very bullish way. Let me show you what I mean, guys. Oh my God. Now that is a real bullish wave count. Oh my God. Let me just bring this down. So with an ABC here, what we should expect, it's a very obvious flat, guys. It's very close to a flat, very close. Of course, in real world, a flat is not in a flat. Wave A and wave C are not terminating exactly at the same level, but they are very close to each other, as you can see here. So this is a flat correction, which usually happens in wave 4. So this might be wave 4 of a 5-wave sequence to the upside. And honestly, just to look at the previous moves indicates that yes, it is indeed a wave 4, because this is 3, this is 4. And from 4, of course, we are going to reach higher, or at least this is what we expect, of course, to wave 5 here. Okay. So having a flat here, did you see what I did here? Having a flat in this same exact position indicated that it's a 4-wave. So I went back to the price action before what I assumed to be wave 4, and I found out that indeed the price action indicates 1, 2, 3. But there's one note here. I don't think that wave 5 will be larger than wave 3, because wave 3 is very close to the size of wave 1, and it cannot be the shortest. Sorry, it is more than wave 1. So I think we will be okay. We can get to this high. So guys, this is what we are expecting now. Of course, when we are talking about wave 3 is expected to be sharp. And we can see sharpness here. As you can see, the price is pushing to the upside in a strong fashion. Now it's at 77. Our resistance is at 29.75. So maybe we can still catch some buy position here. So, or first of all, before the buy, I'm going to specify resistance. 29.75. Now we are trying, obviously, to break this resistance. We are at 80 already. So we want to place an order to buy 10 pips above this resistance. Buy at 29.85. Now the problem is the stop, of course. It's not easy to place a stop here, because even if we drop 100 pips, that will not harm the outlook yet after this unbelievable wave count that is pointing to the upside. Let me look for a stop, but for the targets, I think it's easy to spot the targets. They are the retracement levels we were just talking about. 30.77. Excuse me, I'm sorry guys. It's really hard to give you an initial target that is less than that, but you know, because you guys like it very much, I'm gonna try. Although I don't prefer this. I don't prefer to give a target below 30.77. I'm still gonna try. What about the stop here? 47. Okay. 30.47. Yeah, that's okay. Now for the second target, it's definitely going to be the 88.6. If you can wait, then wait for 32, guys. Don't close your position before that, and get yourself more than 200 pips of profit. So now the only thing we still need to specify before we can place this order on our real QTimeFX account is the stop. Okay, if we draw a rising trend line from last week bottom, it will be very close to this moving average band. I think on the 4-hour chart, yeah, we can also see that. I'm still going to use retracement levels for the last part of this move, this last part. Although it's not a complete 5, but I'm still going to use that. And I want to see, I'm going to use 61.8. Why? I'm going to tell you why. I'm going to use the 61.8, not any other retracement level, as support for today, because first of all, it's very close to this bottom right here. And again, it's very close to the rising trend line. At the moment, we have maybe 15 pips of difference between them. But of course, each hour or so, the price is going to push, this trend line is going to push to the upside a little bit until we meet later today in the evening. So they will be getting closer and closer to each other. And of course, the moving average band is here, the price bottom is here, the trend line is here. So 29.28, without a doubt, is going to be my support for today. 29.28. Okay, guys. $29.28 is my support. 20 pips below that is 29.08, and this makes good sense from my risk management point of view. Support 29.28, and I encourage you to initiate a position in the direction of a break of either of these two levels. We are very close to triggering this buy, so I'm gonna immediately go and place my buy at 85. Buy stop, of course. Joshua, just look at these numbers. My stop is going to be 29.08, 77 pips, not bad at all. I really want to place it like this, guys. I really do. But for you, I know you like smaller targets. I'm going to place it like this, okay? 62 pips instead of 92 pips. I wanted to place 92 pips for my limit and place. And there you go, guys. This is our recommendation for the pound. And now buy at 29.85, stop at 29.08, and a limit at 30.47, and go. Now, in case a surprise happens and we start falling, we want to be short. And of course, we can be only short only with a break below the support, which is 29.28. So I'm gonna sell at 29.08 with a stop at obviously 29.85. Now let's look for the targets, target 1 and target 2. Now, if we get to these levels, of course, I think it will be better to use an hourly chart. Yeah, if we get to levels below this bottom here, below the moving average, below this rising trend line, then definitely a short will become justified. It's not justified at the moment, but if this happens, it will become justified. And in this case, we of course expect the price to dive to levels below the previous top, the previous touch on the trend line, 28.95. Below here, once we start trading ground here, we can easily get to this low here, which is 28.25. It's a little bit more than you like to see, guys, so I'm going to use this next bottom, maybe 28.63. How about that? Yeah, 28.63 for short. 28.63. That's my recommendation. Here it is. Now, the second target, of course, is going to be below that. And I do remember that we talked about the initial Fibonacci level for this whole move. 38.2 Fibonacci level for this whole move is at 2701. And that's what I'm going to use as my limit for, in case, of course, a huge surprise happens and we drop below 29.28. I don't expect that to happen, but of course it's a market. Anything can happen. If it happens, we need to be ready to take advantage. Okay, guys, so immediately to our trading account and sell stop, of course, at 29.08. Stop 29.85. And a limit at 28.63. I forgot the one. 28.63. Okay, and place. And there you go, guys. Sell at 29.08, stop 29.85, and the limit at 28.63. And with this, we come to the end of the part that is dedicated to the cable. One last instrument we have time for, and that is, of course, the dollar index. I'm very interested in the dollar index. First of all, guys, this is the daily chart. As you can see, after testing this very important level, the 50% level, what happened, guys? First of all, we had a shooting star, and then we had a drop. And this drop has broken below this rising trend line, and now it is trying to break below the moving average band, the bottom of the moving average band, which of course screams bearish. It screams bearish. When you look at this chart, if you don't see a bear here, yeah, you need to learn technical analysis all over again. It's very, very obvious, very clear. But we still need the price to push below the bottom of the moving average band. When that happens, then the bears will take complete control of this market and will push the dollar lower. This is, of course, the dollar index, guys. Another indication that we are moving lower, of course, is the direction of both the stochastic indicator, which generated a sell signal here, and the RSI indicator, my favorite indicator. And as you can see, the MACD is not generating anything here, but we are very close to a cross. And when the MACD crosses the signal line to the downside, that's a further confirmation that this market is very weak. We also have a wave count, 5 wave count to the downside with 3 to the upside. I want to update this count with this unbelievable update edition. It's very, very nice. Very nice. Very, very nice. Everything on this chart is saying that the dollar is going to face very hard times. We want to push below the bottom of the moving average band. We are already a few pips below it. We want a real push below it, so we feel good about this. And then you're going to see the euro moving higher, the pound moving higher, gold moving higher, and the dollar yen diving. These are the 4 instruments that we had time for today. Because, of course, when I want to talk about trading techniques, I cannot do 6. I wish I can, but I cannot fit 6 instruments in this webinar. So today we're talking about 4, and we have left you with 4 instruments, recommendations on 4 instruments. Now, for the last part of today, I'm gonna, of course, continue talking about the technique that we have been talking about this day. So guys, we talked about these examples, of course. We talked about these great people. Because of these great people and other research, we know how to trade the markets, and I cannot thank them enough. I really do feel like I'm very lucky because of the work that these great gentlemen have done. Now we talked about these examples, more examples. I don't want to waste your time on screenshot examples. I want to show you real examples on the chart. And I want you guys to keep in mind one thing. Keep in mind, although sometimes it looks like magic, and you're gonna see it looking like magic, I assure you, you are going to see it looking like magic, guys. But keep in mind that although sometimes it looks like magic, it is only support and resistance. It's not magic, and we should treat these levels like we treat any other support or resistance level, and estimate the chances of them holding or breaking in the same way. And for that, of course, we need to use the power of technical confirmation. What do I mean by that? When I find a retracement level that looks important, I look, or a number of retracement levels. Of course, we have many retracement levels. So I may be looking at the 38.2, the 50%, 61.8. And to decide which one is going to play the star role in reversing the market, what I need to do is to look for signs on the chart for which one is more important. The one that is closer to previous tops and bottoms should be the one that is more important than others. When there is a trend line very close to these retracement levels, that is important. Now, for other factors that can help me decide if the market is going to reverse from these levels or not, we have, of course, having an overbought or oversold. Maybe the market is recovering and then it reaches the 50% level, but the RSI is still pointing to the upside and it did not reach overbought yet. In that case, I assume that there's still room to reach the 61.8, not the 50%. So I wait at the 50%. I do nothing. But if we reach 61.8, RSI is an overbought, and then we touch this level and we start falling, that's a better opportunity for me than just hitting the 50% while the RSI is not overbought. Of course, guys, we also need to see price action. That's why I always keep the candle chart in front of me when the price is reaching these retracement levels. After touching a retracement level or getting very close to a retracement level, once the market starts changing direction, I look for the candle patterns. If I see a candle pattern that indicates reversal, then I jump in. If I don't, then I don't. And this is the point that I really want to focus on today. You need to see something happening before you jump in. Some people just wait for a touch. Once the price touch any retracement level, they get in. That is completely wrong. That's not how you trade retracement levels. Once we touch one of the key retracement levels, we wait for the market to show us where it's going. If it's going to reverse, if it's giving us reversal signals from candles, RSI, anything else, we jump in. If it does not, we wait, because there's always another retracement. If you think that the market is going to reverse at 38.2% and it does not, then the next is going to be 50. You wait for it at 50. If it does not reverse at 50, you wait for it at 61.8 and so on. That's why, guys, we need other factors to help us estimate the chances of the market reversing. Okay, and of course we have a magical tool in Elliott wave counts. I love Elliott wave counts, I really do. And I was just talking about this. I'm going to show you on the dollar chart what I mean, and I'm going to show you an example, guys. Now I'm going to show you examples, not screenshot examples like the one I have shown you in the second hour of today's webinar. No. I'm going to show you real examples from the market. For that, of course, we need to go to the chart. This is an unbelievable example, and it's very recent. It's very new. It's still fresh. This is, of course, the dollar index daily chart. We have been talking about a 5-wave count to the downside, and then we have an ABC to the upside. And this ABC stopped after touching the 50% level. Now we touched the 50% level. Maybe actually, if you want to be extremely technical about it, The A touched the 50% level, and the C got closer to the 61.8% level. But to me, what I was keeping on my chart is this, the 50%. Once we touch the 50%, obvious resistance here, as you can see, guys, here. And again, even in C wave, which is supposed to go beyond the top of wave A, we got resistance very close to 50% level 1 day, 2 days, 3 days, 4 days, and then we tried to break above it here, but failed. This failure further indicates that the 50% level will survive. Why? Because we only have a shadow above it, and we closed below it, leaving what is, of course, if you know your candles, this is an ideal shooting star. It can't get more ideal than this. Long upper shadow, a small lower shadow, small body near the bottom of the range, and of course it comes after a rising move. So every requirement is there, and it happened very, very close to the 50% level. What happened after that? Guys, it's obvious. It's obvious. It dropped, of course. So here, your sell signal. Here is your sell signal. Not here, not when we touch the 50%. We need to see what the market is doing. So once we get ourselves doji, hammer, engulfing pattern, whatever it is, any pattern from the candle world that proves or indicates that there's a reversal about to happen in the market, we use it as our entry. We wait for the close. This close here, in my own opinion, is a perfect sell signal. This by itself showed you, I think this is Friday, yeah. This is the candle, the daily candle for Friday, and it showed us that the dollar can't hold on to gains because it got up here, but come closing time, it closed here below the 50% level. Lower upper shadow is very long compared to the size of the candle, another weakness sign, and shooting star, of course. So what happened on Monday, guys? You can easily see what happened on Monday. Boom, to the downside, as expected. A lot of guys ask me how can we get, in our webinars, FX Educast is promoting this idea that you can get 1,000 pips a month. Some guys come to me and how can we make 1,000 pips a month? That's a lot. No, it's not a lot. It's not a lot if you use technical analysis and you spend enough time on the chart to spot the good opportunities. When you see these good opportunities, you get in. 1,000 pips a month is not a lot, believe me, guys. Of course, you can't expect to do this when you are a beginner. Definitely, you need to read a lot of books. You need to spend years watching the chart, trading real money, not demo money, guys. If you are not really confident, then trade small amounts, but don't waste your time trading demo, because on a demo account you will not feel the real feel of the market. Why? If you lose your demo account, you can go and open another demo account, so you don't feel that pressure. But when it's real money, you know that if you lose your whole account, then there's no more money to trade. You need to deposit again or wait until you collect some money and get in, so you act. But on a demo account, you do not act. You say to yourself, well, even if we lose this time, I'm gonna open another account and I'm gonna trade again until I get it right. So you lose 10 demo accounts, and one of the demo accounts gets to double its balance, and you tell everybody about the account that doubled. So don't waste your time. Of course, at the beginning, I recommend, of course, if you are a beginner, I definitely recommend you trade a demo for a while, but only for very few weeks, 2 to 4 weeks. That's it. This is my recommendation. I know people who try to trade demo accounts for months. That's a waste of your time, your energy, and it's not going to make you a better trader, believe me. So this is one fantastic example on how you can get the best opportunities in the market. This close here is one of the best opportunities, in my own opinion, that you can get in. Shooting star at a Fibonacci level with a long upper shadow and a fantastic bearish wave count 5 to the downside, 3 to the upside, then of course more weakness is expected. So easy money. This is a situation where I can say easy money. Another example, I'm going to show you recent examples from the euro. And for that, yeah, I'm going to use another chart. I don't want to delete everything I have left on that chart. Absolutely fantastic. Absolutely fantastic. Okay, guys, another chart. I don't want to. Now, these things that I leave behind on the chart, they are very dear to me. I don't want to delete them. So yeah, finally we find a euro chart that we can use without deleting important information on the chart. Yeah, guys, I'm gonna remove all drawing tools and show you this example here. Not one example, actually several examples. So guys, as you can see, we have a very good recovery attempt here, and then the market started moving sideways. This sideways movement, of course, indicates correction, and that is the right time to start thinking about retracements when you think that the market is going to correct. Now, I'm going to make it as clear as possible. Yeah, so this is a move in the direction of the market. Then we have a correction. One of the reasons why we should believe that this is a correction is the shape of this part. And I'm sure by now you know what is an ABC and what's the value of having an ABC on the chart. Of course, it indicates reversal. So when you have an ABC pointing to the downside, that means the market is going to move to the upside. So with having this, just let me adjust the beginning of wave 8. This is the beginning of wave 8. Okay. With having a strong move to the upside, then an ABC to the downside, we expect the market to move higher. So it drops to the 50%, and look at this unbelievable magic, guys. Unbelievable. Just look at this accuracy. Exactly at the 50% level, and then we start moving to the upside. Okay, and then boom, 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 boom. So if you were lucky enough to buy here, you would be a very happy man. In a matter of hours, this is an hourly chart, so each candle is only 1 hour. Now, the thing that I'm promoting here is using retracement levels in a way that would save you the trouble of getting in too early. Too early means, for example, at the 38.2 instead of at the 50% level. Okay, so I want to see a price action supporting my decision. Let me show you an example. I'm going to compare two traders. The first trader is the one buying immediately when we touch any retracement level, which is wrong, of course, in my own opinion. If he got to 38.2, he's buying, and then the market drops. So this is not the best. Of course, it can drop even more than 50, maybe 61. 78.6, and then his stop would be hit, and he would then, after the market recovers to the upside, he would say, I'm unlucky, man. No, you're not unlucky. You made a mistake. You should admit making mistakes, so you correct these mistakes. Everybody makes mistakes, not only the beginners. Everybody, guys, makes mistakes. But the hope that we have is that with every year of experience that you add to your career, your mistakes will get less. Okay? So buying here is not a good decision. Why? Because we don't have any kind of price action supporting a reversal. So red candle, and then again red candle below it. So What reason do we have to buy? None. But here, after touching the 50%, we have a green candle. We have an accurate situation here and a green candle here. And after this candle closes with a long lower shadow, this is the time to get in, guys. Not here, but here on the way to the upside. Now the market was dropping and then it changed direction with this candle and its bottom exactly at the 50% level. This is your entry here. So guys, this is my philosophy when it comes to retracement levels. You don't get in once we touch a retracement level. Just because we touch it does not mean we have to jump in immediately. No. We wait for the market to show us that, yes, I am the market. I am moving in the direction you are expecting. I am moving, I'm reversing at this retracement level and then moving to the other side or in the other direction, and that is the right time to get in here. You may ask, well, Munther, you are talking about two levels that are very close to each other. What's the big deal here? You're making a big deal out of nothing. What we do have here, 2 pips or maybe even at the same price. It's not about the price, guys, because this drop, before generating a reversal signal in the form of this candle, it would not be a surprise at all if we saw this drop continue digging deeper and deeper and deeper to the 78.6 or 88.6, dropping more than 50 pips below this entry level here, and then of course that would hit the stop. So it's not a matter of 2 pips or 5 pips. It's a matter of getting in when you get the sign from the market that it reversed, not before that. So it's a matter of timing more than a price. You may end up buying at the same price. Someone who bought right at the right time, someone who did not buy at the right time, both of them are buying at the right price, but not at the right time. The first one who bought just because we touched the retracement level may suffer a drop to the downside and get scared, maybe closing his position with a loss or hitting the stop, while the second trader who gets in when the market confirms the new direction, he will not have to go through that suffering, buying here and then the market is moving to the upside, not buying here and then the market is moving to the downside, which can push you to close your position, or at least you will feel very bad about your position and you don't know what will happen to it. Okay, guys, so these are 2 examples up until now. I'm going to show you another example before we call this a day. I'm going to delete this one so you don't get confused. This is another example, guys, of how a retracement level can do its magic. As you can see, we have been recovering, of course, after the ABC, we recovered, and then we again corrected the recovery to the downside, which of course is expected. Now, when you see this, guys, happening very close to a retracement level, then you are in luck. ABC terminating very, very close, maybe a pip or 2 very close to the retracement level. That is fantastic. Here where you should get in. But of course, guys, not immediately at the bottom. We need to see the price recovery. In this case, topping, of course, we need to see this is a red candle and it was followed by a green candle. So instead of risking ourselves here, when the price starts pushing higher, higher, we get in. We may wait for the close, but if we see the market getting stronger and stronger, some people, and I do it sometimes, I get in even before the close, just when I'm convinced that the market is really pushing to the upside. And this happens here in the form of trading above the top of the two previous candles here. The highest here is 10, 10, 10, 10 at the same time, at the same level for 2 times in a row. Once we start trading above 10, 10 here, you may get in. Or if you want to be safe, of course, you have to wait for the close. So you have to wait here to 34 instead of above 10, 10. And of course, as you can see, guys, this pays off. Even if you wait for the close after such a strong move to the upside, the profit is unbelievable. This is very, very, very good. However, when you see the reaction away from a retracement level to be this sharp, it is better to wait for a better price to get in. This is my own opinion. If we closed this candle here, that would be a fantastic place to get in, just above these two tops here. But when you see a very strong candle, then it's normal to expect the market to correct a little bit to the downside before moving again to the upside. So in these cases, I recommend you wait for a better price. Just a little drop, 10, 20 pips, something like that, and then you jump in and you will be a very, very happy man when you see where the market is going after retracement levels. And one of the most important techniques that I use around retracement levels is spotting ABCs, like here and here, as you can see, and candles. So use ABCs and candles around retracement levels to assess if a reversal is going to happen around this retracement level, or if we should wait for the next retracement level before we think about a reversal. With this, guys, we come to the end of this webinar that I have enjoyed very much. Thank you very much for being here. Thank you, everybody. We have issued signals for today on 4 instruments only, and we have discussed a trading technique that I really believe you can use to make a lot of profit in the market, a lot of profit. This is a fantastic technique. I use it all the time. I really recommend it. I highly recommend it. So go ahead and use it and try it at least on a demo account or so before you use it on your real account. Thank you very much for being here, and a reminder that this free webinar was sponsored by QTimeFX, our favorite forex broker in the whole world, who is offering you the chance to trade with very, very attractive spreads. Imagine yourself trading the euro dollar and the dollar yen with less than half a pip, guys, with 0 commission. This is, of course, the best part, because if we give you a fantastic spread, then commission, then that's not a huge advantage. We want to give you a huge advantage, guys. That's why I want you to trade with the broker who won the award for the lowest forex spread broker of 2018, and I'm sure they're gonna get it for 2019, and I hope for 2020 as well, and so on, because they are offering you and me and everybody the chance to trade with unbelievable spreads, very, very tight spreads, and 0 commission. And on the top of that, your funds are segregated in UOB, which is ranked in the 22nd place in World Bank ranking. And of course, now we have that promotion, which everybody is talking about. $500, guys, $500. Okay, did you hear that? $500, real American dollars, real green money, which you can go and spend in any way you like. We want you to withdraw the money. We want you to take advantage of this bonus. So make a deposit of $150 and you will be entitled to a bonus of $250, or make a deposit of $300 and you will be entitled for the real big bonus of $500. I want you to use this promotion, guys. But to get these promotional benefits, you must contact us at fx_educast via Telegram. So again, guys, FX_educast via Telegram. This is where you should be contacting us, so we make sure that you are getting all of these promotional benefits. Okay, people? Okay, guys? So don't hesitate. Don't wait. The team from FX Educast will be waiting for your questions and your requests. And if you have a question, they're going to answer it with a big smile on their faces. And if you want to open the account, you need help, they're going to help you with big smiles on their faces as well. So go and show QTimeFX some love. Contact us at FX_educast via Telegram. Tell them thank you for these webinars, for these trading opportunities, for these spreads, for the $500. Open your account with us where you can start, of course, trading these trading opportunities that we talk about every day in our webinars. We have provided you with trading strategies and recommendations which achieved profit almost every day recently, and we are going to continue to do so until you make that big profit and you withdraw the profit, withdraw the bonus, and be happy traders with us, and tell everybody about QTimeFX, FX Educast, and Munther Marji. With this, guys, I'm going to leave you now with the hope of meeting you again in 21 hours. We're going to meet again at the same time, of course, like every day. We're going to spend 3 hours together. I'm going to tell you about the trading technique, and I'm going to show you the best trading opportunities in the market. So be there tomorrow, 21 hours from now, and let's do this again. With this, I'm going to leave you guys. So I'm going to sign off like I always do. Good trading and good luck. See you guys.